Andrew Carrillo is the president and portfolio manager, Barnett Capital Advisors. Andrew, with everything going on in the economy and the markets recently, what do you think is the most important thing investors getting close to retirement or in retirement need to keep in mind?
Yeah, definitely, Deb. Interest rates have seen some of the largest increases in over 40 years. The Fed's been fighting inflation. The problem with the Fed's approach now is that interest on the national debt is soaring, which is going to create a lot more inflation to pay that debt. So I think more than ever, investors need to create an all-weather strategy. I think last year was proof that traditional asset allocation of just stocks and bonds does not truly diversify a portfolio. Bonds were down 15%, stocks were down 18% on average. So I think investors need to look at their retirement plan and always have something that can go up if everything else goes down.
Well, what type of investments do you see most investors might be missing from their portfolio?
Yeah, what I see is a lot of people are crowded into the same exact names, right? There's two types of styles in the stock market. There's growth and there's value. So most people think growth beats value just because growth has the word growth in it. But over time, they actually do an inverse relationship. Sometimes growth wins, sometimes value wins. But there's studies that show since 1926, value has outperformed. So I think value investments have been underperforming the last few years. And one of the biggest mistakes people make is they go for what's been outperforming, but risk in the stock market comes from overpaying, right? So if you pay 1,000 times, or if you fall in love with the story, then yeah, you really just are owning a piece of paper, right? Because there's no real meat, there's no earnings. So value investors like us, something we've developed over the years is a data-driven approach to value investing, helps clients go into the most undervalued companies that are available into 20 or 25, so it's focused, and we can move a lot differently than the market. We look for companies that are trading maybe at 5 times earnings. And if you can buy something at 5 times earnings, right? Let's say a McDonald's, sounds boring, but no growth in it. But at 5 times earnings for 100,000, you pay 500, that's 20% a year with no growth.
Yeah. Real quick, what advice do you have for investors getting close to retirement? They're a little skittish right now about the markets.
Yeah, definitely. Is run your numbers. Take a look at your asset allocation. See how much growth investments you have. How overweight are you in some of the top 7 names that have been carrying the market? Take a look at your numbers, understand what your gap is. So your gap is what you need to come up with for income from your portfolio, and make sure you have a good cash reserve, a good defensive bucket, and really just create an all-weather strategy. So no matter what happens, no matter what environment, and that's something I think people need to do. I see very missing in a lot of portfolios is advisors look back at the last 80 years and they see, okay, that's what's possible. Something I like to do is let's look back 200 or 300 years. Okay. A portfolio designed to navigate that world.
All right, Andrew Carrillo, president and portfolio manager, Barnett Capital Advisors. Thank you.
Thank you.